So I'm going to be talking about the communities you're involved in. I'm going to be talking about what's happening to those communities to give you a basis for building not your jobs, but your careers. Taking a look at where these communities are going, what factors are going to shape them. I think the fundamental theme that they have to look at is the changing nature of the housing consumer in terms of an aging population, people who are looking very strongly at their home as their principal asset. So they're no longer thinking of home as accommodation. They've reached the stage in their life cycle where they're thinking about living off the value of their home, and that changes their housing behavior significantly. Changing role of newcomers in housing markets, the land use implications of a lot of what we're seeing in housing markets with respect to communities emptying out, the empty bedroom communities. Some legal issues involved in dealing with aging vendors and people listing their property and the question of capacity to sign and list and the vendor's responsibility in that regard. People's concerns with housing pricing. I think vendors and purchasers are much more sensitive now to expectations of what's going to happen to prices. And I think in that regard, people in the real estate industry are going to have to become a little bit more both informed and proactive with respect to discussing pricing and what people may reasonably expect with respect to housing prices. So we're always out there looking for the one thing and the one person who will tell us what we have to know. They do not exist. If you find a person who says, here's the one thing you must know to be successful, walk away. Remember what they said, because that will be part of the answer, but it will not be the whole answer. One of people used to go around saying, you know, demographics explains everything, and then Greece defaults on its loans. Now, where does that got to do with demographics? Or Al-Qaeda arrives. China expands. All of this stuff's supposed to be outside of demographics. Again, these are the forces that drive change. So don't look for an answer, look for the answers. What realtors have to do is and everybody, is broaden their perspectives and look at a wide range of factors and forces that shape the market. And that's a good thing to do because it will make them more robust in understanding the work they're doing. It will make their explanations more informative when they talk to vendors and purchasers. So it's important not to be seeking the single answer, but rather looking at the several answers and how they interplay. If somebody ever says to you, the baby boom is going to do this, walk away. Because there is no such thing as a baby boom in terms of a personality. Maybe an absence of personality, but certainly not a personality. And so we look at this and we say, okay, the birth dates tell us much about people. So somebody says we've got a baby boomer marketing strategy. What would you think if somebody said they had a Sagittarius marketing strategy? Would you really think that was sound science? Now, the fact that Sagittarians are intelligent, thoughtful, good-looking, and wise still doesn't really give you the basis of using birthdays as a business plan. And yet that's what we do when we talk about the baby boom. The other issue that is profound, it is very hard for a woman to have 1.7 children. She can have 1 or 2 or 3 or 4. So what was really happening out there is some women were having 2 or 3 kids, and some women were having no kids. So we're in a situation now that in Canada, approximately 1/4 of women will never have a child during their lifetime. This has profound implications for housing markets, labor markets of both types. It has issues in the future of care for the seniors population, tremendously. And it also creates a housing market that's quite different than the historical housing market because we have a never nested housing market. Everybody says, well, the empty nests and the people downsizing. You never have kids, you upsize. You don't downsize. So an issue there that we should consider. The typical age in Canada of a woman having a child now is 30 to 34. So what we have done is pushed back the beginning of families by a full decade. Again, neither good nor bad, but profound changes to society brought this about, and also consequences of it. So let's talk about the trend of pushing the life cycle back 10 years. People are having kids 10 years later, they're moving out of their parents' home 10 years later, which means at the tail end of the life cycle, given that people's life expectancy has gone up 10 years, we're finding what used to be the elderly transition stage of the housing market is also pushed back 10 years. So rather than at age 65, people retiring, selling the house, the male spouse dying, moving into rental property, we're finding that's pushed back to age 75, 80, and probably by the time we get there even further, so that people in that stage of the life cycle, they're 65, their kids have finally moved out, they have a two-wage earner household, both of them have pensions, a very affluent seniors population. They're looking at their house and there's no reason for them to move, but they're also looking at how their standard of living is going to be for the next 20, 25 years that they may be alive. And so they're looking in their housing decision, they're looking for a better alternative to the house they're in, but they want to maintain the style of living, but they also want to be able to realize the value of that asset, or part of the value of that asset, whether it is by remortgaging or by selling and downsizing in terms of the number of bedrooms, except you still have to have one for the grandkids, going into a condo, going into a townhouse. So that end of the market is going to be important because the sheer number of people that will be aging into that age group, but also because their behavior is not predictable on the basis of our nostalgia for the past and what we thought happened then. So there's what happened in fertility rates, and why this is so important is not so much the baby boom itself, yes, that high level of births, but about 1972, the average number of births a woman would have during her lifetime dropped below 2.1, and 2.1 is the replacement level for birth rates. For a country's population to remain stable in both size and age composition, you have to have 2.1 births per woman. If you're above that, you'll have a population that is growing, but you'll also have a population that's growing younger because there'll be more kids than parents. Once you drop below that line, which we did 4 decades ago, you have a population that grows older because you have more parents than children, and you have a population without migration that will shrink. So what we have set ourselves up for in Canada as a whole demographically is we have had 4 decades where we didn't replace ourselves as people, but we also didn't replace ourselves in the labor force. So increasingly our labor force strategy becomes a immigration strategy. Our new workforce is visibly and culturally different from our traditional workforce. Calgary is more visibly diverse than Montreal. So there's also this communities of newcomers who are looking for that same kind of housing and family housing that everybody else was starting out. There's a tremendous opportunity for realtors to get together with those people and figure out how to help them with their housing needs. People in the entry-level housing market, 25 to 34, account for, and take the younger age group, account for 1/3 of the market. 2/3 of the market are people who are older, who have higher incomes, who've already owned a home. So if you want to understand the housing market, what you have to understand is not what's happening to the entry level, which is the smallest segment of your market. You have to understand what's happening to 2/3 of your market, which is the people over the age of 35. If we take a look at the purchasers in the Calgary market, instead of looking at their age, take a look at what they are. 70% of them are previous owners. When we look at the Royal Bank or the TD Bank's index of income to price, what's left out of that? Equity. What do 70% of the purchasers in Calgary have that's not income when they go to buy a house? Equity. They're drowning in cash. So that when we go in and say, gee, you know, CMHC is going to change from a 1% down to a 5% down to a 6% down, these people are saying, I've got to turn the page in the newspaper because I've got 25% down, 40% down, I got 100% down. So first of all, previous owners are 70% of your market. Previous owners, 2/3 of them are buying bigger houses. Point form predictions of the future for the Alberta real estate market. Housing prices will not fall significantly. There is no meltdown coming. Interest rates will not increase dramatically because the Bank of Canada can't afford to increase interest rates dramatically because the Canadian dollar is above par with the US already. So we'll see a gradual increase in interest rates. Incomes in Alberta are going to go up because it's a resource-dependent province, and commodity markets, while volatile, are following long-run upward trends. So prices in Alberta are going to go up. They're not going to go up by that huge jump we saw in 2006, 2008, but they're going to go up by the differential between the growth in incomes and the growth in interest rates. It'll take a little bit longer for that movement to happen because you're still at about 6% unemployment, and you got to kind of move down to about 4.5%, which is the long-run normal for Alberta. So that's prediction one. Prediction two, you're going to have something, I haven't got the precise number, but I think it's about 700,000 additional people come here in the next 35 years. So you're going to have to come up with about 350,000 more dwelling units. So there's going to be demand for housing. So not only are prices going to be strong, but there's also going to be development opportunities. That's prediction number two. Prediction number three, that's going to cause you problems because you got to figure out where to put those houses. And if you put them in the empty bedroom neighborhoods, which makes all the sense in the world to do, you have all of these retired people who are quite affluent and have nothing but time to object to you putting density in their neighborhoods. If you put them out on the edge of the city, you're going to have to build the transportation out to get them to them, and that's going to put a lot more cars and other forms of transportation demand in your existing communities. So the only bigger problem you could possibly have is if none of that happened. Because dealing with the issues raised by growth and change in prices and demand gives you tremendous opportunities. There's nothing you can do in a collapsing economy. One has to be intelligently optimistic about that. And that means being A, realistic about it, and B, also becoming more informed. We can't look at other markets and project where our future is going to go. What we've got to do is take a look at the fundamentals of the Alberta economy and see what the implications of those fundamentals are for our real estate markets. And with any reasonable bounds, things look pretty good.